Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing. Today's pre-opening grain and livestock comments. I want to lead off with diesel and heating oil. We are right back up, about to retest the two-year high there. 277 in the spot month was the 2 month, excuse me, was the 2-year high we did right at the end of January. That was a month ago. We're right up there again, sports fans. I think as long as we stay under $3, we'll just be in this trading range we've been in for 2 years, kind of at the top of it. But be careful. Be careful about getting super bullish here. Um, Crude oil is at 6 month highs, like 5 month highs, going back to August. If anything gets solved in Iran, this will go away quickly. So just be careful getting long up here and getting bowled up because of the headlines. That's my opinion. Um, in the grains overnight, pretty quiet night. May corn, a 2 cent range, right? Down 3/4 of a cent. New crop corn hit a high of 65 and a low of 63, 2 cents. Really nothing going on in corn. We are, however, uh, you know, right at that 66 level was the high of the January 12th report. If you are following me, you know I've got a sell target specifically. If you want those, that's 95% of what I do is I help farmers who, let's face it, you guys hate to sell anytime, anything, anywhere, and sometimes you get too emotional. So part of my program is I do give specific cash sell targets with percentages. We are coming up on one right now. We are already about 10 to 15% sold on new crop soybeans. New crop soybeans overnight, a 5 cent range, quiet range, trading at 11.17. If we can get above 11.30, that'll be like a 18-month high. It'll be a huge victory. I do have some sell targets for new crop soybeans if you are a producer above 11.30. Again, if you want those levels, sign up for my letter. Um, the wheat's had a heck of a run, 7 month highs. July Chicago had another 6 cent range overnight, kind of quiet, but it just feels like, most of that was short covering from the funds who were short for about a year. I think that was a gift for people to sell. Also, I put it on social media. If you run that big long-term retracement for the last year and a half, which starts up when we were at 690, and when we bottomed out here just in January at 530, 590 is a big retracement level. So it's a technical thing for chart traders. It's a short cover and rally. You can call it what you want, but it is a 38% retracement of that slide, which started, back in 2020, well, September of uh, 2024. So it was a really big slide down. This 588 area is a 38% retracement. Uh, I'm not calling tops, but I do want to use those technicals to help guys make better sell decisions, right? Call me crazy. I like selling into 7 month highs. I don't like selling into contract lows. Some guys do. Obviously, that's why there's multiple people out there with grain marketing programs, but I always like to try to reward rallies. If you look at KC, the same thing. We had our highs in 2025 up there near $7, 678. We found our bottom um, last October at 533. Well, we've just come halfway back. So do you want to use that or not? I try and get my clients to use that. And we hit halfway back last week when we hit 602, and then boom, we've moved down here to 582. So what is a cash sale recommendation like that, worth to you, right? So if that's something that you need help with or want to talk about, give me a call 312-638-8868. I'm not perfect. I did not reinvent the trading rules. What I try and do is help farmers make better cash sales. That's what I've been doing now for the better part of 15 years. Prior to that, I spent 20 years on the floor trading my own account down at the Chicago Board of Trade. Moving over to the cattle, are we or are we not going to get the strike in that packing plant? Are they going to let that packing plant go dark? Some guys don't think it's going to happen. Yesterday's sell-off was really just guys waking up and saying, "Oh, we may close that plant down." It didn't close down, and we recovered. So fundamentally, the story remains the same. It was a friendly cattle on feed. The herd's too small. Blah blah blah. You don't. We've all heard the same thing for 2 years. Cash is at record highs. Cutout was higher. The Packers are losing money. How much longer are the Packers going to lose? That's not for me to determine. So what we can do is manage risk. We've had a tremendous recovery rally. We're near um, some good resistance. If you don't have hedges, look at getting hedges on. And finally, in the hogs, a good recovery after a pretty classic 38% retracement. If you look at December lean hogs, that rally that we had from 73 cents to 83, right? When we found support there right above 79 cents, that was a 38% retracement. And now we're right back up, taking a shot at 83, which is contract highs. Um, I think the hogs are probably the friendliest thing in the protein complex right now. So if you are selling animals, I think you need to reown them with cheap calls. And do you need to maintain a put in case we get some craziness out there? Absolutely. But it's a great market if you are long hogs. And again, don't be afraid to reown them after you sell them. All right, guys, this is Chris Robinson, Robinson Ag Marketing, 312 638 8868. Take care.